Every chart tells a story, but only trained traders know how to read them. In this lesson, we'll test your knowledge on pattern recognition using real market scenarios from Chapter 18. You'll apply what you've learned about moving averages, RSI momentum, trend strength, and price behavior to make the most strategic trading decision possible. Let's begin. Question 1. What does it mean when the fast-moving average crosses above the slow-moving average and RSI is above 50? Is it A, a bearish crossover signal, B, a sign to stay out of the market, C, a potential bullish signal confirmed by momentum, or D, RSI is likely to reverse soon? You have 10 seconds to record your answer. If you ever need more time, feel free to pause this video. The correct answer is C, a potential bullish signal confirmed by momentum. When the fast-moving average crosses above the slow-moving average and RSI stays above 50, traders often view this as a bullish signal supported by strong momentum. This may suggest that buyers are gaining control and the trend could continue moving higher. Question 2. In an ascending triangle, what usually signals a strong bullish breakout? Is it A, price breaks above resistance with RSI holding above 50, B, RSI drops below 30, C, price makes a lower low, or D, moving averages are flat? You have 10 seconds to record your answer. The correct answer is A, price breaks above resistance with RSI holding above 50. When price breaks above the resistance line of an ascending triangle while RSI remains above 50, traders often interpret this as a bullish breakout supported by momentum. This combination may signal continued buying strength and possible trend continuation. Question 3. Which of the following confirms a descending triangle breakdown? Is it A, the RSI pushes above 70, B, price stays above support, C, RSI drops below 50 and price breaks support, or D, moving averages cross over to the upside? Take a moment and think through the setup. The correct answer is C. The RSI drops below 50 and price breaks support. When price breaks below the support level of a descending triangle while RSI falls below 50, traders often interpret this as a bearish breakdown, supported by weakening momentum. This combination may signal increasing selling pressure and possible continuation to the downside. Question 4. How do traders typically react to a confirmed head and shoulders pattern with RSI showing lower highs? Is it A, ignore the signal and hold, B, enter a short trade after the neckline breaks, C, buy at the neckline, or D, wait for RSI to push above 70? Think through the pattern and momentum carefully. The correct answer is B. Enter a short trade after the neckline breaks. When a head and shoulders pattern is confirmed and RSI begins forming lower highs, traders often interpret this as weakening bullish momentum. A break below the neckline may signal a bearish reversal and a potential move lower. Question 5. What signals a strong bullish confirmation in a bullish flag pattern? Is it A, moving averages cross over to the downside, B, RSI near 30 and price below the moving averages, C, sideways movement with flat moving averages, or D, price above rising moving averages and RSI above 50? Consider what confirms strength within an uptrend. The correct answer is D, price above rising moving averages and RSI above 50. When price remains above rising moving averages while RSI holds above 50, traders often interpret this as bullish momentum supporting the flag pattern. This combination may signal trend continuation and increasing buyer strength. Question 6. Which indicator combination weakens a rectangle breakout signal? Is it A, RSI above 50 and upward sloping moving averages? B, RSI below 30 and falling moving averages? C, RSI near 50 and flat moving averages? Or D, price and RSI breaking above resistance? Think about which setup shows the least momentum and trend strength. The correct answer is C, the RSI near 50 and flat moving averages. When the RSI stays near 50 and moving averages remain flat, traders often interpret this as weak momentum and lack of clear trend direction. This may reduce confidence in the strength of a rectangle breakout and increase the possibility of a false signal. Question 7. What usually happens after a double bottom pattern forms and breaks the neckline? Is it A, a bullish reversal? B, a continuation of the downtrend? C, traders enter short positions? Or D, the market stays range-bound? You have 10 seconds to record your answer. The correct answer here is A, a bullish reversal. When a double bottom pattern forms and price breaks above the neckline, traders often interpret this as a bullish reversal signal. This breakout may suggest that buying pressure is increasing and the previous downtrend could be losing strength. Question 8. In a falling wedge, which signal confirms a potential long entry? Is it A, price forms higher highs and lower lows with no breakout? B, breakout above the wedge with RSI above 50? C, RSI below 30 and moving averages sloping down? Or D, moving averages flatten and RSI stays near 40? Think about what confirms bullish momentum after the breakout. The correct answer is B, breakout above the wedge with RSI above 50. When price breaks above a falling wedge while RSI holds above 50, traders often interpret this as a bullish confirmation supported by strengthening momentum. This combination may signal a potential trend reversal and possible upside continuation. Question 9. The price just bounced upward from the 10 and 20 moving average zone, and both moving averages are pointing up. What does this usually mean? Is it A, it's unclear, better to wait? B, the trend is ending, time to sell? C, it's a good time to consider buying? Or D, RSI is too high to trade? Think about how traders use rising moving averages as dynamic support zones. The correct answer here is C, it's a good time to consider buying. When price bounces upward from rising moving average zones, traders often interpret this as a sign that bullish momentum remains intact. The moving averages may be acting as dynamic support, which can create potential buying opportunities within the existing uptrend. Last but not least, here's question 10. Which sign shows that an uptrend is still healthy? Is it A, price is above moving averages and RSI stays above 50? B, moving averages are flat and RSI is near 50? C, price is below both moving averages and RSI is falling? Or D, price is bouncing between support and resistance with no clear trend? Think about which setup reflects sustained bullish momentum. You have 10 seconds to lock in your answer. The correct answer is A. Price is above moving averages and RSI stays above 50. When price remains above key moving averages while RSI stays above 50, traders often interpret this as a sign of healthy bullish momentum. This combination may suggest that buyers are still in control and the uptrend remains strong. Congratulations. Quiz complete. You tested your understanding and sharpened your awareness. This is how real progress is built. Throughout Chapter 18, you explored how traders use pattern recognition, moving averages, RSI momentum, dynamic support and resistance, and trend behavior to better understand market direction and identify higher probability trade setups. You also learned how confirmation signals can help traders avoid weaker entries and recognize when momentum is strengthening or fading. Keep practicing and keep going. The more charts you study, the more confident and consistent your decisions will become. We've completed Day 18. Solid progress. Keep growing. Up next, Day 19. Understanding the MACD basics. In our next lesson, we'll explore this powerful momentum indicator and how traders use it to measure trend direction and identify high probability entry signals.
Watching this video on YouTube? Ready to master trading psychology? Visit marketmindsetuniversity.com for free access to Day 0 and see how we teach trading the right way. Step by step, with structure and clarity. Practice with purpose. Perform with precision. I'm Michelle. See you with the next lesson.